Hello and welcome to India Business Hour. I'm Parikshit Luthra. Let's go straight to the headlines at this hour. Reliance delivers a strong set of numbers, beating the street on all parameters. Fourth quarter net profits jumped 22% sequentially to 19,300 crores. This is the company's highest quarterly net profit on record. Q4 EBITDA jumps 22% to near 41,400 crores, aided by strong performance across businesses. Annual EBITDA scales 1.5 lakh crores for the first time. Jio delivers a steady set of fourth quarter numbers in line with expectations as subscriber base nears 440 million, helped by a speedy rollout of 5G services. Net profits rise nearly 2% sequentially to 4,700 crore rupees. Margins come in above 52% for the fifth quarter in a row. Other segments of Jio platforms deliver a surprise, resulting in annualized revenues of over 1 lakh crore rupees. Reliance Retail's fourth quarter gross revenues jump 19% year-on-year, aided by strong growth in its grocery, consumer, electronics and fashion verticals. Strong expansion in its store footprint and investments in strengthening supply chains bear fruit. Indian benchmark indices slip 1% this week as IT companies' earnings drag the market. Nifty IT records its biggest weekly fall since December. 31 Nifty stocks post losses this week. Reserve Bank has permitted HDFC Bank to hike stake in insurance subsidiaries to over 50% before the merger. This will allow them to now buy Aberdeen's 2% stake in HDFC.
Subsidy disrupts strategy, subsidy masks reality, and subsidy blunts innovation.
Bajaj Auto MD Rajiv Bajaj says subsidy masks reality and innovation as well, amid reports that the government is not in favour of extending EV subsidies beyond March 2024. Bajaj reveals a Triumph model will be unveiled on 27 June in London. Legacy blue ticks disappear as Twitter begins its much-talked-about purge. Elon Musk puts out a cryptic tweet saying such a great day in so many ways. 74% of Nifty 50 companies do not have active verification status. 11 Nifty companies have a verification through a golden tick, which denotes it being an official organization. Massive search operations underway to trace the terrorists who attacked an army vehicle in Jammu and Kashmir. A high alert has been sounded in border districts. Violence in Sudan continues despite the nation's rapid support forces agreeing to a ceasefire. The country's army chief makes no mention of a truce in his TV address. Prime Minister Modi holds a high-level meeting asking officials to prepare contingency evacuation plans for Indians stranded in Sudan. Russia accidentally bombs its own city near Ukraine border, leaving a 20-meter crater. Ukrainian President Zelensky urges NATO chief to fast-track the country's NATO membership. NATO chief says that all member countries have agreed that Ukraine will join the alliance once the war is over. Also on the program, anime craze grips India. Fans rejoice as PVR Inox plans to screen at least 10 anime films a year, while Netflix plans to launch 40 anime titles this year globally. First up, Reliance Industries has come out with a stellar set of numbers in the fourth quarter after it beat estimates on all counts. The firm has posted its highest ever quarterly net profits, which rose 22% on a quarterly basis to come in at over 19,000 crore rupees. Our team of researchers are standing by to take us through the highlights. Sonia, first to you, a stellar performance from RIL.
Oh, absolutely. A very good set of numbers coming in from Reliance Industries. So let's take you through the internals. This is a record quarter that Reliance Industries has posted in terms of its quarterly performance. Numbers are a beat on almost all parameters, but the star of the show clearly is the oil to chemicals business. This is the highest ever quarterly profits. The consolidated profits up by 22% on a quarter-on-quarter basis, coming in at a little under 20,000 crores. The EBITDA margins as well have improved to 18% versus 16.2%. The oil to chemical business performance is very strong this time. EBITDA has gone up by 17% sequentially, and the margins have improved as well. This is despite all the global uncertainties as well as disruptions in the commodity markets. On retail and Jio as well, the numbers are looking pretty good. A resilient performance for the retail business despite all the challenges. And Rel Jio as well has reported a steady performance despite the lack of any tariff hikes. Revenue growth of around 1.7% or so. But let me get the team in to give you the rest of the numbers. Rima, let me toss it across to you for Reliance Jio's numbers.
Thanks so much for that. So Reliance Jio is steady, a revenue growth of 1.7% quarter-on-quarter. This is driven by a 1.4% increase in the subscriber base and a 0.3% increase in the overall ARPUs. But as the trend would show you, the revenue growth for the company has slowed down. 1.7% growth this quarter is lower than the recent run rate, and the key reason for that is the absence of a tariff hike. Margins are stable at 52.2% sequentially, and the profit has jumped by 1.7%. The other key internals, subscriber addition is fairly healthy, 6.4 million subscribers in Q4 and 29 million subscribers in FY23. Broadband addition, Jio broadband subscriber addition has also been very strong at 9 million. They're wrapping up FY23 with strength. So revenue growth of 18%, a bottom line jump of 23%, aided with a margin expansion. Now, Reliance Jio comes under Jio Platforms, which is the holding company for Reliance Jio and other digital assets, and that this time has crossed an annualized revenue run rate of 1 lakh crore. Also, in terms of the other digital assets which are doing well, IPL has seen unprecedented viewership so far with a peak concurrency of 24 million views. And the company goes on to say that they're on track to complete a pan-India 5G rollout by December 2023. So a steady performance coming in from Reliance Jio. But Sonal, what about O2C?
Well, definitely a star of the show, right? All to chemicals, very strong set of numbers, and it was a beat on all parameters as well. If we talk about the numbers, revenues were down 11%, of course, but that is largely because crude prices were down, and that's why pass-through was on the lower side. But EBITDA, that was up 17% to come in at 16,293 crore rupees, and this is, of course, led by higher refining margins, leading to an operating profit margin growth to 12.7% versus 9.6%. The company said that exports increase was led by higher price realizations despite lower downstream product volumes, and also export duty had an impact of around 6,700 crore rupees. This is the windfall taxes that I'm talking about in the year gone by. But despite that, company has been able to do really well this quarter. The other star was oil and gas business, because there as well, company saw good performance this time. So revenues, they were down 2%. Revenues were higher by around 2%, but the EBITDA was down 2% to come in at 3,801 crore rupees. The average price realized in the KG-D6 basin was at $10.6 per MMBTU, which is higher, actually doubling on a YY basis. And the KG-D6 basin is expected to produce 30 MMSCMD of gas by FY24, which is currently at around 19 MMSCMD, and this would account to 30% of India's gas production. So good, strong set of numbers, and the outlook is looking positive as well. But that's about the energy business. Mangalam, tell us about retail.
Well, the retail business was rather resilient this time around. Quarter on quarter, there was growth, and it was led by the network expansion of the company. They've added over 900 stores in the fourth quarter itself. For the entire year, over 3,300 stores. Footfalls have been at an all-time high in the fourth quarter. Nearly 22 crore people have visited Reliance stores. But if you just take a look at the numbers, quarter on quarter, despite it being, a festive base, we've seen the revenues grow by 2.5%, and the EBITDA has grown a little ahead of revenues. That's telling you that operating leverage is playing out. So the EBITDA margins at 7.1% as well. Year on year, the revenues have grown 19.4%, and the EBITDA has grown 33% as well. For the entire year, we have had nearly 78 crore Indians visit Reliance stores. So network expansion definitely playing out for them. The retail business doing extremely well.
Now to the day's market action. Indian indices closed with minor changes following a range-bound session. However, both Sensex and Nifty lost 1% this week, weighed down by weak tech earnings. Reserve Bank has offered HDFC Bank relief on priority sector lending norms and permitted the merged HDFC entity to hike stake in HDFC Ergo and HDFC Life to over 50% before effective date. Ritu Singh joins us with more.
Well, there's some regulatory relief and some disappointments, if you could call it that, with RBI granting certain exemptions to HDFC and HDFC Bank for their mega $40 billion merger. First, the relief. RBI has allowed the bank to meet priority sector requirements in a staggered fashion in the next 3-year time frame. PSL is essentially loans to weaker segments of the economy, and banks have to keep 40% of their loans for this. So the merged entity is going to have some time to rebalance its book. The second relief is in terms of HDFC Limited's stake in the insurance subsidiaries, where RBI has said that HDFC Bank or HDFC Limited can increase its shareholding to more than 50% in both HDFC Life and HDFC Ergo before the effective date. Currently, HDFC holds about 48 to 49% stake in both, where it will now hike stake marginally. Now, as far as HDFC's stake in other subsidiaries is concerned, so HDFC Education and Development Services and HDFC Credila, that will have to be brought down to 10% in the next 2 years. Now, where RBI has not granted relief is in meeting LCR, CRR and SLR requirements, which I'll explain. So HDFC Bank had sought a phased approach to meet these reserve liquidity requirement ratios. For instance, banks have to invest 18% of their deposits in government bonds, which is your SLR or statutory liquidity ratio, and keep 4.5% of deposits as liquid cash, which is your CRR or cash reserve ratio. But RBI has granted no relief on this front, and on the effective date, the bank will have to comply with all of these. Our sources, however, indicate that the bank may be comfortable enough to be able to meet these requirements by the time of the merger. Besides this, RBI has permitted the merged entity to link HDFC loans to appropriate benchmarks in a 6-month time frame, but it has also asked them to ensure that income recognition asset classification norms are complied with as on the date of the effective merger.
And amid reports that the government is not in favour of extending the subsidy scheme for electric vehicle companies, Bajaj Auto's Managing Director Rajiv Bajaj says he isn't a fan of subsidies. In a conversation with CNBC-TV18, Bajaj added that India cannot build a future with so many subsidies in a sector.
I am not a fan of subsidies of any kind. And I do not think India is going to build a EV future based on subsidies. Subsidies going away, in my view, should not really have that big an impact in the long run, because the future of EVs in India will be built on the back of sound strategy, not subsidy. Subsidy is not a strategy, and in my view, subsidy disrupts strategy, subsidy masks reality, and subsidy blunts innovation.
Rajiv Bajaj there saying that Indian industry will now start having to look at a scenario which is without subsidies post March 2024. Moving on, WTO's ruling against import duties on information and communication technology products is being viewed with skepticism by India's fast-growing mobile manufacturing industry. While the Indian government is going to challenge the ruling and has assured of no immediate impact on trade, the mobile industry feels that there is a scope for a duty cut in several mobile products. Abhimanyu Sharma filed this report.
India has declared its intent to contest WTO's ruling, which had recommended removal of import duties on ICT products. While WTO's ruling says India cannot impose import duty on ICT products by virtue of being a signatory to the Information Technology Agreement 1995, government sources have pointed out that many items cited in WTO's order did not exist in 1995. Experts say the current dispute has arisen out of an error India had made regarding classification of items as per a harmonized system accepted by WTO members.
This transposition to 2002 from harmonized system 2002 to harmonized system 2007 was not done properly, and due to oversight, India made a mistake in agreeing to the transposition of its own tariff schedule to HS 2007. That has been rejected by the dispute settlement panel. So India will point out some of the shortcomings or flaws in the argument. Transposition will then take into account, for instance, a cellular phone as we know it now. Whether this was in existence at the time of the signing of the Information Technology Agreement.
Industry experts warn that the WTO ruling, if implemented, could potentially impact cell phone manufacturing, as in a zero-duty scenario, companies would have no incentive to manufacture locally and would prefer to import completely built-up units.
It's very unfortunate that the panel has ruled against us. India has a very stellar record of abiding by international commitments. The duty imposed in 2017 was with clean hands because we have a technical and legal interpretation of ITA1 which is very robust. Let me give you the details. The WCO 96 codes which defined ITA1 never included cellular phones. Cordless handsets and radio telephones were included in it.
However, trade experts explain that WTO's appellate body does not have any members at present, and this is a point that could go in India's favor.
The appellate body of the WTO is non-functional because it does not have any members at present. It is a permanent body of 7 members, any 3 of whom have to hear an appeal. This matter will get tested sometime in future, hopefully, when the appellate body gets reconstituted. But till that time, India can continue with its duties as at present.
With the WTO's appellate body yet to be constituted, it's unlikely for India's appeal to be heard anytime soon. In the meantime, India may consider negotiating with individual countries to settle this dispute. In Delhi, this is Abhimanyu Sharma for CNBC-TV18.
And time for a short break here on India Business Hour. But coming up on the other side, legacy blue ticks disappear as Twitter begins its much talked about purge. Details when we return. Welcome back. You are watching India Business Hour. Elon Musk on Twitter has started the much talked about purge of verification tick marks for users who have not signed up for its blue subscription service. This has led to several celebrities, athletes, politicians, industrialists, journalists across the board losing their verification status. Kanishka Sarkar finds out more about the benefits associated with Twitter Blue, the eligibility criteria and concerns.
Twitter has finally ticked the box on its blue tick purge. After several false starts, Twitter has finally begun making good on its promise to remove blue checks from accounts that don't pay a monthly fee to keep them. It had about 3 lakh verified users under the original blue tick system, but those checks have now begun to disappear.
Users in the United States need to pay $8 a month for the verification tick, while in India it costs 900 rupees a month or a discounted rate of 9,400 rupees a year. So, for all you keen on getting the blue badge of honor, here's what you need to do. Firstly, here's a caveat. Only accounts actively subscribed to Twitter Blue are eligible. For this, your account must have a display name and a profile photo. Secondly, the account must have been active in the past 30 days. Also, your account must be older than 30 days upon subscription and have a confirmed phone number. Another criteria which has been red flagged by many is that the account must have no recent changes to profile photo, display name or username. Musk, however, tried to address this issue previously.
During this kind of transition period, we're extra vigilant about impersonation. So I agree that over time, if somebody has a trusted track record, they should be able to change their name and profile picture without losing the blue check. During this transition period, we want to be, just like I said, extra vigilant against impersonation. So that's why we're being so rigorous in this regard.
Despite Musk's assurance, several content creators, journalists and businesses too have pointed out the risk of parody accounts and impersonation because of the new scheme in place.
Sure, there are challenges, but you do get additional benefits if you opt in for Twitter's paid subscription. It not only adds a blue check mark to your account, but also offers early access to features like edit tweet, undo tweet. Blue subscribers can also post longer videos and tweets and can even make changes to their text, like formatting them. You're also likely to see approximately 50% fewer ads and more organic tweets on your feed. In Delhi, Kanishka Sarkar.
All right. Thank you very much, Kanishka, for getting us that report. Moving on now. Search operations are underway to trace the terrorists who attacked an army vehicle in Jammu and Kashmir's Poonch district. A high alert has been sounded in border districts. Arunima joins us with the latest. Arunima, what is happening on the ground in terms of the probe?
5 Indian Army jawan martyred in the Poonch terror attack. One is battling for his life. What really happened in that 5 to 10 minutes that this terror attack was carried out? Initial probe seems to suggest that up to 5 terrorists could have been involved. The suspicion is that at least 3 of these were foreign terrorists, 2 maybe local supports. What the forensic teams have picked up from the ground seem to suggest that grenade was lobbed at that truck and there was bullet fired from 3 directions. Was an IED or a sticky bomb used? The fire that engulfed the truck seems to suggest that, but authorities, the agencies which are probing, are waiting for the forensic team to give them some concrete answer to that. It is also a possibility that the firing and the lobbing of the grenade led to the fuel tank of the truck going up in flames, and there was also some ration that was being carried. So perhaps there was cooking oil and other incendiary material inside the truck that could have led to the fire. So at this stage, the possibility of an IED or a sticky bomb is not being ruled out. They're waiting for the forensic analysis report to come in.
And before we wrap, India Business Hour, here's a programming note. Sustainable is attainable. An initiative by Tata Power and News 18 Network has been at the forefront, urging people of India to adopt sustainable practices ahead of Earth Day. We bring you a very special film set in Ladakh. This film depicts how solar power is leading to a future of great possibilities. We leave you with that inspiring thought. Thank you for watching. Goodbye.
बैकपैक में भर के ख्वाबों का दम बढ़ते कदम को देके रिदम थकते फिसलते संभलते बढ़ते चले हम ठंडी हवा से लड़ते
यार आज फिर से लाइट नहीं है ऐसे में हमारी ट्रेनिंग कैसे होगी यार
ट्रेनिंग तो जरूर होगी एकेडमी का लाइट तो सोलर पावर से ऑन हो गया अब अपनी पावर ऑन करें
होगी रोशन हर रात तू चल दे पावर को ग्रीन सिग्नल
जुड़िए न्यूज़ 18 नेटवर्क और टाटा पावर के सस्टेनेबल इज अटेनेबल मिशन से।